So for crypto and Bitcoin, but really crypto, anytime I talk about Bitcoin, I'm really also talking about the overall crypto market, by the way. Because remember, Bitcoin and Ethereum make up over 60+% of the entire crypto market capitalization. And Bitcoin makes up the bulk of that 60+%. Okay. So this is a really interesting piece of content that really paints a very simple black and white picture. Okay. I'm going to say you need to understand the stage before we get into this. Understand that the stage is this, is that regardless of what crypto is or is not doing right here, right now, you have large negative macroeconomic factors at play. Massive global inflation, okay, number one, not just in the United States, everywhere. In fact, Argentina, I believe, has over 150% inflation. That's insane. You have recession globally in one way or the other. You have inside back to the inflation. Everything physically costs more, so people are afraid, and it's impacting personal people. I mean, personally, all of us. When everything costs more money, it costs more money to go to the grocery store. It costs more for rent, for everything. For to go to the store, it just costs more. Everything in our lives costs more because of rising prices, right? And this goes back to that narrative of inflation, recession, and all that. And ultimately, it equals fear. Okay, now. There's other things, Russia, Ukraine, impacting our supply chain for food, all those kind of things, rising prices, right? Now, holding back the bears, why Bitcoin must break 22,500. This is a very interesting piece of content. Okay, so we all know that Bitcoin continues to struggle in the 20,000. In fact, it has dropped below 20,000 and is in the has hit in the high 19s, high teens. Okay, now, I'm also going to say there is a strong possibility that Bitcoin could roll down into that $14,000, $15,000 range. It is entirely possible. There is technical analysis out there that points to that. Here's what I would say to you. It sounds really, really bad, but that is the bottom. Okay, we are pretty close relatively to the bottom. We're only $4,000 or $5,000 away from Bitcoin's bottom. By the way, Ethereum could do the same thing, go below 1,000 to 500-600 range. Again, we're really close to the bottom. If there's a silver lining here, it is that. We don't have a lot more to fall. And the analysis points to the fact that we most likely will not go below that 14,000. It's not like we'll drop down into like 5, 6, and we definitely will not go to zero, 5, 6,000 or whatever. Okay, so remember, we've got the macroeconomic things at play. We've got just individual personal fear across billions of retail people, right? Thus, they pull their money out of crypto, okay? So that's all here. And that's not mentioned in this article, but that's all part of this, okay? So you got to remember this. You understand all this. Now, so they're basically talking about the fact that they're looking at some technical indicators here. Let me see. We did form some support at 20,000. We knew that. Another critical technical level is the 200-week moving average, which the digital asset Bitcoin is currently trading below. Okay. Now, this is the first time in history that the price of BTC has ever fallen below the 200-day moving average, registering one of the most bearish trends ever recorded in the market. So again, you're living in that right now. Okay. As such, there is now significant resistance mounting at the 200-week moving average, which lies at an average of 22,005. That's the reason for the headline, why Bitcoin must break 22.5, because that's the number, okay? That's where the 200-week moving average number is. Now, I'm going to remind you, again, of those macroeconomic factors: inflation, recession, war, fear, global panic, etc. Okay, I'm not saying that from a doom and gloom standpoint. I'm just trying to wrap you around this story so that you understand that it's a multifaceted scenario. Okay, now, so that's our number. Okay, now we've got to get past that. Now, will it happen? Yes, it will happen. The matter is when. Most likely, we've got more downside possible risk to move down because we're in the summer, June, July, which historically are not great bullish times for crypto in general, and we still have this rampant inflation, etc. So I think, again, more downside risk is possible, but this is the number you need to be aware of. 22.5, we get past that, and we have broken a significant barrier. So this goes on to talk about how sentiment refuses to budge. And really the sentiment is that first part of the video where I talked to you about consumer sentiment, right? The crypto fear and greed is at a extreme fear 13. It has been here since last month. So we're in our second month, if you will, of extreme fear. Extreme fear equals personal, individualized retail investment fear that is global across billions of people. And then you factor that in the capacity of also institutional investors. And by the way, stocks have been hit hard as well. Okay, this is not just a crypto thing. Stocks have been hit hard as well. It's an overriding thing. Okay, so 22.5, there's your number. Keep an eye on it. Thanks for giving me a few minutes of your day. I'll see you.